some melting in my shine. Beautiful shrooms. Top my tongue, I see black lines. Ain't stumbling on line. I might stay at a whoop like I'm whipping around. When I'm chopping, you shy. But we ain't having pressure, we having pride. I know when they lazy. No, I'm always faded, yes. She said, boy, you crazy. Sky high and sedated. Too high, can't drive. I be in the backseat of Mercedes. She ain't fast, you wait.
What's good, bro? Brand new week. Another amazing week. Pretty much down. We're on Thursday right now. Two trades again. I feel like that's my sweet spot, honestly. Like 2 wins to end off January will end tomorrow. Friday will be the last daily candle of January. And yeah, I think I've only missed maybe 1-2 trades overall in the month. But still, that's amazing. That's like somewhere between 15 to 20 are still with the losses. So very good start. Very, very good start to the year. Show you my calendar right now. Week 1, the 6th to the 10th, we took 2 wins, one on Tuesday, one on Thursday. Then the next Monday, following Monday, took a loss. Then took a win on Wednesday after that. So there was a win and a loss for the second week, and then a win, a loss, and a win for last week. Then we come into this week, take a win on Tuesday. Happened to miss a trade on Monday, but no problem at all. Took a win on Tuesday, did not trade Wednesday, and then just took a win today on Thursday as the new daily candle opened throughout Asian session. Just hit TP before. So far for January, 7 wins, 2 losses, which is quite incredible. 7 times 3, 21. Take away 2 is 19R. So 19R for January. Pretty awesome. Just reflecting on the week. Like I said, I don't think I'm really going to trade Friday. We have got quite a lot of news to come, even though we've just had that huge bullish move there that I showed briefly from 2757s to 2771s, and now I think we're breaking that as we speak. So I'm not quite sure what's going to happen for the rest of the week, but I think I'm going to make the conscious decision to not trade and position myself and prepare myself for a fresh month of new economic data and reports. And yeah, get positioned for that for February. Because we've had a nice January, there's no need to force another trade and potentially just take another loss. But even if I did, minus 1R isn't that big a deal. We're talking about 19R here. So yeah, if I do take a loss, it's not that big of a deal. But yeah, I like the approach of taking a certain amount of trades, almost like a sniper. Approach it like a trading month, like a sniper. Like I'm only looking to really capitalize on 2 to 3 trades a week.
You know that shit that you say when you're broke, like when I get dough, am I bringing you 2? Then I blew up and reality hit. Shit, now I gotta think this through.
Yo, we back, baby, on the weekly chart for a brand new candle open. Now, previous week closed very strong bullish, as we discussed in the last video, that prices went up basically from sub 2700s all the way to peaking at just under 2790s, around 2786s. So yep, strong bullish. I anticipate it's already taken place now for a healthy bottom wick to be created, then bullish pressure, which is if a healthy wick is created on the weekly time frame, that's essentially just like minor pullbacks on the intraday, which is happening right now as we speak. But yeah, So I anticipate a week, and then potentially, because we closed above here, and we haven't actually closed on the weekly above 27.47s since, well, forever. That's literally the first time we've closed above there ever on the weekly. So that's a big deal, and I think we'll probably continue and drive up and at least break the weekly highs and continue on. But right now, at the start of the week, after the bullish push up to end the week, we're obviously going to correct at least some of the move. So I anticipate I want price to at least tap into 27.40s. That would be great, and potentially find support around there. But I'm also looking at the 27.20s if we want to push deeper and potentially break it's not last week's, but it's like a major low basically. Let's say around 27.35s. Third daily candle of the week. Some surprising shit happened yesterday, and we got extremely bullish um, and broke out to the upside. Yeah, I'm not going to be touching anything until I would say the next daily candle. So I'm essentially skipping Wednesday's daily candle. The daily candle is just open, because I really don't see any setups that could possibly even form for London session open. And obviously we're past Asian session open now, so I don't see any possible setups I could see. And personally, when it's FOMC, when it's interest rate decision, I would like to wait until the next daily candle open um, after that event, and not trade during, because it's very choppy and uncertain. On Monday, around London session, we had some buys take place from 27.57s to 27.71s. Nice little scalp, literally reversed perfectly at 27.71s, as it was just a pullback from the newly made lows around here. Pullback continuation throughout New York session later that day. But yeah, made sense regardless. Some London session open buys. Now, the entry for this other trade was around London session. If you see right here, London session open 3 a.m. Eastern. We rated the lows, and then we immediately reversed back above the key level, printing strong bullish candles from there. The next time price pushed above after London session open, and the newly made lows were made, like on the lower time frames, and more structure was just created for this like kind of intraday double bottom that was formed in this area after the pullback and correction from the newly made highs. So a lot of things just made sense here to take the buys, but unfortunately, if you had bought around open, you would have been sitting in profit, but it would have been ranging for some hours. That was the only thing. And then eventually we did break out at NY Open, which normally I like. If I take a trade, an entry at London Open, I like to be out of the trade before NY Open, I would say. Or getting around that time, I want to be out the trade. But regardless, we took some buys from 27.40s to 27.57s. But although I only risked like 25 pips on this trade, so I didn't even go for the full range. But had you risked even 50 pips, let's say, you still could have got that 1 to 3, just filling the entire range. And that honestly would have been having a very comfortable stop there. Honestly, that would have been a good stop, but it just wasn't necessary. A lot of the times it isn't necessary, so I've started to be like a little bit more aggressive with my stop placement, like because I want to get that 1 to 3 as fast as possible. So if I can get it before the key levels even reached, that's great. It gives me opportunity even to extend the trade further. But obviously, there are going to be times where you get stopped out due to purely having a tight stop. Basically, 2 buys took place this week so far. We're going into interest rate decision, FOMC, daily candle. Won't be trading this at all. We'll basically just skip to Thursday open, Asian open, and assess all the data and the information that has came out regarding rates and the overall monetary policy going forward. Right, but the pricing's got to make sense, in my opinion. But could be some sells. There could be some sells depending on what happens. Unfortunately, missed these buys on Monday. I don't want to like force shitty trades like straight at the first few hours of the weekly and end up taking a loss that's like unnecessary. But yeah, guys, just wanted to quickly update because I haven't really done any updates this week so far. So I just wanted to quickly update. I would have definitely took these buys had I been positioned at the right time. On Monday, London Open, and then London Open again on the next daily candle. Basically the same sort of buy scenario. It's just it was a wider range and it was a different range, lower. But it's essentially the same thing. Like this was a pullback before we continued to make a new low. After we made a new low, pullback, and there's a good chance that price will come and revisit this area. And honestly, I would love for it because even if it's not bearish and it's still bullish, coming all the way back down here create amazing structure to continue buys back up. But we could be entering like a short term, even intraday bearish phase if we like are unable to break above this level at 27.75s, let's say roughly. We're still like kind of maintaining that bearish structure that we have had since New York session. Well, really since the open on the weekly. Still respecting that bearish structure. Although we've had these nice buy position opportunities on the pullbacks, I still feel more comfortable taking buys on gold than sells, like always. That's just something I've kind of like implemented into my plan is that like I would much rather favor a buy position over a sell position. Like it's going to take me a lot to take a sell position. The 29th, pretty much the end of January to end the month. January was pretty sick, not gonna lie. Pretty clean. Nice, clean, sturdy week. The more we get deeper into this journey, the more apparent it becomes the reason why we're doing this, right? This is why the doppelganger, because I just want to prove, I want to have something that just can't lie, is just authentic and genuine. The last time we spoke, I literally said that I wasn't not going to trade. I think we were around here, just ranging around the 27.62s, 27.63s. We were rejecting this level, obviously after this huge bullish move on Tuesday, New York session. Just before FOMC, we had the bearish pullback, which was like inevitable to happen. We did highlight this area around 27.46s, which I was looking for that to be tapped into, but realistically, it could have just pulled back here and then continued on. But luckily, we had a nice intraday pullback, around a 50% correction from this bullish move, retest, perfect rejection during FOMC, where we had no rate change and not much really changed in the overall approach when it comes to the Fed. I think they're going to slow down on rate cuts now. They want to keep the economy resilient, so obviously rate cuts have been well and truly priced in at this point. So you're going to start to see a little bit of a shift in the policy. But overall, gold buys were still valid with the structure making sense. And obviously, I favor buys no matter what. On an economic side, not much was really changed when the FOMC happened. But like I said, I wanted this candle to close, the Wednesday the candle to close. Once the Wednesday candle closed, I would be looking for potential positions. What happened is that we rated the lows, of course, because we were already at some lows before FOMC, so we rated further, dipped further. Happened to be literally the AOI that I highlighted in the last clip. Well, the day before, if you go back to even before this daily candle formed, I had already had this area highlighted as a potential area the price could pull back to and react at post FOMC, dipped lower, reversed. Then we had this lower time frame shift where we started closing above here, pushing back above the key level just before the close. Then obviously new highs made, shift in structure, price pulled back, retested like the kind of broken structure that we had on the lower time frames. As you can see here, broke above, retest, found lower time frame support, continued to push back above the key level. And this was like literally happening just before the new daily open. If you go down to the 1 minute here, after we pushed back above and we had the new daily open pushed down, retested the key level again and continued on. And now we're sitting at 2763s, breaking new highs and continuing up. I think there actually is a good chance that with the FOMC volume, post FOMC volume, we can continue on well above these highs and tap into the 2771s AOI. Second trade of the week for me, 30 pip risk, 90 pip gain. 2757 post FOMC buys on gold. This trade is probably going to be my last trade unless we have some very good price action next daily candle. But I think there's a good chance that this daily candle is going to close strong bullish. And then probably the next daily candle will probably continue up because I definitely see this daily candle breaking the previous daily highs. If I TP at 2766s, that will be me done for the day. 2766 just got tapped as we approach London Open, literally like an hour before London Open, pre-London hours, price just surges, breaking the previous daily highs, now making new highs and continuing that bullish trend. So yeah, very good trade. Literally just post FOMC buys. Could have got your entry literally on the open of the new daily candle, trading from 2757s to 2766s. So yo guys, you're looking at weekly price action in total. 1 hour time frame is currently, as you can see, the 31st of January, Friday. We do have PC inflation data later today, but pretty much the end of the month. The monthly candle is going to close in 17 hours, along with the weekly and the daily, of course. We just printed into new all-time highs at 2799.6, just shy of 2800, sorry. So yeah, we rode the buys into new all-time highs post FOMC, post rate decision. Still very, very clean bullish. Now we're just accumulating at the highs as we've pushed well over 500 pips since Wednesday's close.